Good evening, friends. QnA with Sunil Damania. And I know there are many questions that are bothering mind. There's a lot of confusion about whether budget was good or bad. And in fact, if you know what my verdict was, uh, now let me try to address some of the concerns that bothering everyone. And I thought, there are a lot of when I talk to the customers, there are a lot of fear that there in the people's mind. So I thought, let me look at the data out of that fear and grit. Look at the data and what the data are suggesting us. Is this a doom and gloom kind of a scenario? Or the market is giving us a good opportunity to make more money? When I say make more money, I'm not talking about tomorrow or 1 week or after 1 month. But is it giving a good opportunity to create wealth from medium to long term? And when you look at the data, and again, these data are not my data, I've taken data from the government sources or get published somewhere else with the authentic data. So I'm not trying to force my analysis by torturing the data to say what the data is all about. So it's a very interesting data point, and of course then we will have a question answer post my presentation. Before I start presentation, small disclaimer that this webinar is just to enhance your understanding about the equity market. Please consult your financial advisor before buying and selling any stock. Past performance is no indicator of future returns, and investment in securities market are subject to market risk. We all know there are events that was bothering market. What was the event number one? Trump. Event number two, FOMC meeting. Event number three, budget. Event number four, which will get unveiled, is a monetary policy. So let's try to understand what happened to the first three events. Trump. He was supposed to announce heavy tariff from day one. Yesterday, the Mexico and the Canada tariff was supposed to go live. Has it gone live? The answer is no. China 10% still there. And it was proposed to be 60%. That not happened. And it's all back. Am I right? Indian government did some concession based on the tariff fear. In our budget, we reduced some of the import duty on some of the products. Now, sometimes the assumption and the realities are a little different. Everyone thought the US market is going to go up because of Trump is going to come. So what happens when Trump basically assumed the office in White House, the Nasdaq is down by 0.7. S&P 500 is almost at the same level. And of course, we can't say because of Trump coming in, the BS 500 is up by 0.3%. So has it created that developed market will do well and it will be a scenario of a doom and gloom for the emerging market? Doesn't look like, at least for Indian market, when you look at from 20th January. FOMC meeting, everyone knew there will not be any rate cut, but you saw S&P 500 going down, Nasdaq little bit going down, of course, and that also due to some extent dipstick and so on and so forth. But Indian market did well. And Union budget, which was not supposed to be good by many experts, the Indian market did well. Of course, it doesn't make sense to compare S&P 500 but that has nothing to do with the Indian finance budget. But that's what the numbers are. So sometimes we get too much, concern about one event which people may not talk about 2 months down the line. But based on that, we'll take a decision which has an impact on our portfolio, not for 2 months, for next 20 years kind of a stuff. And that's why you need to cut the noise and look at the data. And that's exactly what I've tried to look at today in our data point. First thing, let me tell you and reiterate what I've stated in my Saturday webinar. 1 lakh crore that is going in the hands of a consumer, the taxpayer, is not a small amount. And this amount is not one-time effect. It's a year after year, this benefit will keep accruing to the taxpayer. So please remember, 1 lakh is not a small amount. 1 lakh crore. Sorry, 1 lakh crore is not a small amount by any stretch of imagination. Somewhere we get too much concerned by the tariff war, we start looking at the data in a different manner, because when your mind is fearful, you don't see the bright picture. You always get a little fearful. That's what has exactly happened. Is Indian economy slowing down? To some extent, yes, no doubt about it. But is it a doom and gloom kind of a scenario? The answer is no. Because look at the growth in the GST for the month of Jan, 1.96 lakh crore versus 1.77 lakh crore. That's a previous month, and the same period last year, 1.74 lakh crore. Has there a growth? Answer is clearly yes, in double digit. Now someone will always argue the GST is a one data which shows what is happening in the economy. If you remember, when I was presenting some data, I did mention that 3 months in a row the data GST's collection is going down. There is a concern, there is a slowdown. But when the new data comes in, you need to respect that new data. So somewhere, and GST is such a data which is a pure and clean data. Why I'm saying pure and clean data? Because that's actually money that has been, the product that has been consumed by someone, paid money on that, and that money has gone to the government of India. So it's an actual number, and which shows what's happening actually ground reality of the life. Let's look at the today data came PMI as the 6-month high manufacturing. Again, that shows तकलीफ थी. Is it continuing? The answer doesn't look like. When you look at the India Inc. numbers also, okay, and let me look at the India Inc. numbers. 8% profit growth quarter on quarter, 4.5% growth on Y&I, or 69% of the company have already declared the number. So somewhere it doesn't give that indication that it's a gloom and doom kind of scenario. But in the process, what happened? The valuations become very, very attractive. Why? 10-year average of Sensex PE was 24.3, we are at 22. BSE 500, it was 10-year average of 25.7, it's 2.9. Am I right? And if you look at what happened to the stock corrections, this is I have taken only from October 2024 level till today. 85% of the companies are from the BSE 500 have corrected by at least 20%. To 0 to 20% correction, 49%. I'm just taking last 4 months. It's been really brutal. 20 to 40, 35% of the companies taken a beating. 35% is not a small number. And of course, below 40% is one. So the fall has really become too huge in the market. And that really gives an opportunity for all of us to think, should I put money when the valuations have become good? Why? Because the numbers of the India Inc. has not been that bad, which has been. And if you listen to the commentary given by the India Inc., no one talks about doom and gloom scenario kind of stuff. So why then we are not using this opportunity which has been thrown to us to add more money to the equity? Why are we not doing it? Why are we so much fearful? Should we always buy high, or it makes sense to buy it low? I think that's the basic fundamental question that you need to ask yourself. And I'll conclude my presentation with the last slide, which is not now, but after a couple of this one, where I'll show you some data how retail investors always took money out of the market and in a way did not participate in the wealth creation story which Indian equity market did well. And this data I have taken from the economy survey. But let's look at what happened to the market this week. I think market this week, when I said this week, matlab 1 week from last this one, I think did good, reasonably good job. Everything is in green. Okay, and the realty index is up by 10 points. Consumption has done well. Nifty Auto did well. Small and mid cap did well. And Sensex is up by about Sensex and Nifty are up by closer to 3.5%. One which has been little laggard but still positive is PSU Bank and the metal. If you look at YTD, I think Auto did well, FMCG did well, consumption did well purely because of 1 lakh crore coming in. Of course, FMCG continues to remain our contra bet on the 2025. 3 sectors, again I repeat, one is that private sector bank, second is an FMCG, and third is a consumption, capital goods and infra. And post budget also, we continue to believe these 3 sectors should do reasonably well. YTD FPI head flow 81,656 crore. We continue to believe FPI will come back strongly in the rest of 11 months. I again repeat, our base assumption that FPI will put near about 50 to 1 lakh crore in 2025, despite 81,656 crore outflow that has taken place in the first 1 month and 2 days or so. So despite that, we are saying, so you can imagine next 11 months, they should at least put near about 1.3 to 1.81 lakh crore Indian equity market, which is the net inflow. We are not changing, despite heavy outflow in the month of January, to change our prediction for FPI outflow for inflow for 2025. If you go back 2023, we said we will get good inflow, which happened. In 2024, we said a muted inflow. That exactly what has happened. In 2025, we are strongly believe and conviction that FPI will come back. Why FPI will come back, I also tell you. If you look at the economy survey, which clearly stated that US market looks little overvalued. I mentioned that in my blog, which people must have received also. And when there is an outflow from the emerging, when there is a downward pressure on the developed market, funds will flow to the emerging market. Whether that happens 1 month, 3 months down the line, but that will happen. And when that funds start moving from developed market to the emerging markets, India will get fair share of that coming into the Indian equity market. So I must tell you that the kind of outflow that we have seen in last 4 months from FPI, almost 1.8 lakh crore, which has gone out of the Indian equity market by FPI, that money will come back strongly. Whether the 100% of that money comes in or some percent of that money will come in. So don't get too much, get carried away by recency bias. FPI has sold in last 4 months. They may continue selling in next 4 months. I don't think that's going to happen. Why that will not happen? Because economy is showing a lot of resilience. GST data shows so. Manufacturing PMI at 6 months high, that shows so. Valuations become attractive because that number that you saw, Sensex and BSE 500 can near average to now. The Indian earnings are not as bad as what people are making out to be. Rate cut will happen on the RBI this week itself on the 7th Feb. So that will be another factor. And the US market like US are likely to underperform. That means that money will flow to the emerging markets and India should do well. Before just food for thought for everyone, before I open the floor for question answer, if you look at this data, very interesting data, and of course this data has been published in Economy Survey. My request to all of you, this data, the Economy Survey is available free of cost on the website. You don't have to pay a single rupee. When I was in a previous organization, I used to pay money to get the Economy Survey. It used to cost me those days 200 rupees ka book aata tha, and those days digital format was not available. Now it's available free of cost. Read. If you want to know the site, it's available. India Budget, likho, and then I think it's India Budget nic.in, if my memory serves me right. Go there. Now what this data suggests, if you look at the Indian retail investors, always has been taking money out. 2001, 2002, 2003, 2020, 4, 5, 6. Only in 2008 they basically pump in money, which was not the great year. So they pick up the market. They actually had a net flow. Otherwise, again, so many years in a row they outflow and started net inflow into the post-COVID. What is this data suggests is that retail investors have become a little matured. So logically, 2023 should have been the biggest inflow because 2023 was giving the excellent opportunity for investors to put in money, especially since January, February, and March, and then market. But they basically put only 0.14. Had they put more money into it, they would have reaped the benefit of 2024. But they actually highest amount came in the 2024. My request to all of you is that please use deep in the market. This chart basically gives a very good indication. Please put money when the markets are down, not when the markets are up. That's the simple logic. One should do that. If you can't manage, yes, market is going to become more volatile. It's going to become, and once your professionally managed fund will do much better as compared to the personally managed. And in fact, many retail investors, when I spoke to them, they do admit that they are finding it a little difficult to manage. They don't know what to do with railway stocks. They don't know what to do with PSU stocks. They don't know what to do with defense stocks. They got stuck in some of the other companies and they are little clueless what to do. Either they continue to hold without knowing when to exit, how to exit, And if they are told they exit, where else they need to park the funds? Second thing, they are really finding difficult what a kind of allocation that we need to do to the various companies within that, in case if there is they're able to exit from some of the companies. So my request to all of you, remember the mantra of the market: buy low, sell high. And unfortunately, since the market goes down, we start thinking of taking money out of the market, which has happened with many investors. You can see that. Don't do that. In fact, the money that came in was 2000, it was positive, which was a bad year to put in the money because market did crash very badly actually. So my request to all of you is that use this dip in the market to add more to the equity. Whatever gives you comfort level, but don't borrow money and come into the market. And don't come with 3 months, 6 months time horizon. Come with that horizon that basically I am going to put this money at least for not next 2 to 3 years. And if this market is giving me opportunity, let me capitalize on that. That's what I am doing in my personal portfolio. I would request you to do the same thing. Ultimately, only the optimistic make money in the market, not the pessimistic. So if you, and बोलते हैं छाती चाहिए मार्केट में पैसा बनाने के लिए. I think this is a time if you can basically show that courage. छाती मतलब you have to have the courage. And this is a time you need to show the courage and put more money to the equity market. Choice is yours. My job is to advise you. Ultimately, what you make and what you don't make in the money from the market is an action that you take to create wealth from the equity. With this, let's open the floor for question answer. Johnson sir is saying, there is a lot of noise as far as the economy is concerned. Need clarity on the following. Our economic downturn is structural and not temporary. Sir, are you making a statement or you are basically asking a question? I don't think our downturn is structural, it's a temporary. I've shown the data of PMI manufacturing data. I've also shown you the GST collection. No way it gives the impression to me that our downturn is structural. Second thing, if you look at our projection given in the budget document, we are likely to grow at nominal GDP of 10.1%, which is higher than the nominal GDP which is going to grow in FY 2025. So if your question is that is it structural or temporary, I think it's temporary. It's turning around. So growth is projected to be about 6.4%. Consumption is only 3%. I don't know where you got this data from 3%. So maybe if you can help me with the source, I'll be able to respond. Investment has been weak and so has been exports. How is GDP so high? See, we need to understand that there is an investment which is low, and especially from the private side. Capital capex from the public sector, from the government also is little low, no doubt about it. The GDP has slowed down, sir. If you look at the Q1, Q2, if you go back even the FY 2025 GDP outlook, which was in excess of 7%, that was 7.2%, which RBI was predicting, it has come down to now 6.6 and 6.4. So I don't think the GDP is basically not as high as what was that. It is reflecting because of low capex, low exports, and so on and so forth. Weakness is long term. Answer is no. Investment is weak, employment is weak, and income growth is also weak. Consumption down because of this. My sense is that 1 lakh crore which is going to come in basically is going to completely change what we call the consumption basket, and I think it will really make the consumption coming back very strongly. Assume that 1 lakh crore basically which is will be available to the taxpayer. Assume that they only spend 50% of that, and 50% go for the savings and so on and so forth. That itself is a 50,000 crore, which is not a small amount by any stretch of imagination. So I don't think that's a challenge. Okay, what is the next one? Is this done or it's a there? We need to address the long-term growth and job creation. How does the budget do it? I think what budget is trying to figure it out is on a ease of doing business. I think that's one way. And second thing is basically want the private sector to have an animal spirit. So that's the best way we can do that actually. And I think the complete startup system, where the job seeker become a job giver, and that's where it's completely changed the equation for that. Number question, sir, we have too many questions. Consumption cannot be spurred by tax cuts. I beg to differ with you. If growth is boosted and employment is provided, consumption will go up. I agree with you. Weak domestic demand is not the reason to face weak global demand. Weak domestic demand is not the reason in the face of weak global demand. Weak domestic demand is not the reason. So I think the demand is more challenging in the urban side, not in too much in the rural side. And I believe that with the tax cut coming in, I think that will also get corrected. Investment will be restricted only if the risk in the economy will come down. Ease of doing business goes up, and there is a good governance. How does this budget address this? I think the budget is addressing all this, sir. If you go through my presentation, which I made on Saturday, I think you will get an idea about that. In the face of all this issue, will India boom for better stock market returns? I strongly believe India will make Indian equity market should do well in 2025. Otherwise, I would not be recommending put more money into the equity as an asset class. And Indian economy should also do well because I think the measures that government is doing are in the right direction. It's like unfortunately, Johnson sir, the problem is that the budget was more like a art movie than the masala movie, and that's where it takes little time to understand what it was trying to do and what it tried to fix in the economy. So I personally believe this budget is good, and I think it will deliver. It will make India. It will take India to the developed economy status. May not it take to, it may not happen by 2047. It may happen by 2052 or maybe later. But I think we are moving in that direction, and I think the direction is very much right. Many stocks recommended in the stock of the weeks are down by 20% nearly. What are your views on volatile market which may continue in 2020? You are hopeful of FI entering Indian market, but if dollar becoming a strong, is that possible? To Rajendra sir, I think let me first answer the stock of the week. If you look at the pedigree of the stock of the week, they are all good quality companies. It's not that the companies' qualities are bad. It's just that poor sentiment has basically pushed their prices down. So my view on this that the stock of the week has been filtered by our investment committee. They're good quality companies. You can go ahead and buy. Don't get too much. If everything has gone by, almost everything has gone by 20%. Am I right? Which I said that 85% of the company are within BSE 500 are down by at least 20%. So there is nothing basically you need to read too much into it. On the contrary, if you have comfort level is buy, maybe you can buy more of the same company stock of the week. Because the company fundamentals are good. Okay, and if at all we have to exit, we will advise you when to exit. I think if my memory serves me right, yesterday we closed one more stock of the week because the targets got achieved. Am I right, Amir? I think Jason closed yesterday one more stock of the week because the targets are achieved. Remember, in such market, targets are being achieved. That shows the pedigree and the quality of companies being recommended. Just that poor sentiment impacting it. Nothing. There is no fundamental change in the story of those companies. You are hopeful of FI entering Indian market, but if dollar becoming a so strong, is that possible? So, so one assumption we are making that dollar will become strong. I'm not very sure that is the case. I think don't expect dollar to become too strong against the rupee. So I strongly believe Indian equity market will see inflow from FPI in 2025. I think no one is asking single question. किसी ने ना हो किसी ने दो. Harshat Kalesar says, my request for short session on the different ratios and their significant uses in identify is not yet given effect by your back office. Kindly look into it. Thanks a lot, Harshat sir. I think your question is very right. I think Jason should be able to do this the webinar with all of you. ये भेजो ना Jason को भेजो. I think he should be able to do it. We'll take it done, sir. We'll get it done. SJ Rao, can the US economy withstand the trade war with other nations? I don't think so, sir. I believe there will be a retaliatory tariff imposed on US wherever they try to act little smart, and that's what exactly is going to happen. If US goes at if at all goes at with a tariff war, actually, it will be inflationary in nature, which will force FOMC to hike the rate of interest. It could slow down the earnings of the listed entity in US. So I think this is my personal opinion. I could be 100%. I can go 100% wrong also. But my sense is that US will find it extremely difficult with the tariff war. And if you look at what Trump is doing, I don't think he wants tariff war. Let's be very honest with you. What he wants is basically bringing the counterparty on the discussion table. That's the reason Canada and Mexico both tariff has been postponed because he wanted to become a discussion table. I don't think he also understands very smartly that trade war is not going to benefit the US economy. Pramanik sir, could you please update the cash on hand with the mutual fund houses on 31st January? So this data normally takes some time because the mutual fund has to submit their update the scheme documents on their site, which happens by I think 6th or 7th of every month. So maybe when next week when I come in front of you, maybe I will be able to have that data. Right now the data is not available in public domain. Suhas sir, namaste. One of the surveys shows that whatever tax will be saved by around 2 lakh crore people, 80,000 average, 1 lakh 60,000 crore, around 64% will be invested instead of spending. Further, there will be a good rise due to the 8-pay commission. Your views, please. So I think we need to. So I don't know whether the 64% will get saved or my assumption is that 50-50. 50% will be saved, 50% will be invested and saved 50-50. And there is a good rise in the 8-pay commission. I think it will further give more boost to the consumption basket. The only danger of this 1 lakh crore and the 8-pay commission is that will it spur inflation? That's the only concern. My right now sense is that it will not. Whether there is enough competition available, supplies available, it should not spur. But we need to wait and watch. But so that's one of the reasons I'm not very pessimistic about the Indian economy, growth in the Indian economy. I think we are in the right spot. Whatever damage has to be done, it has been already done. It's there in the rear view mirror. I think from the front mirror, I think things are looking more promising. So I'm a little more optimistic about the Indian economy and Indian market. Having said that, there is a challenges in the mid and small cap space. They may continue to underperform. There are select pockets where there is a froth, and that froth has to come off. Whether there is a time correction, there is a price correction, we need to wait and watch. But that froth will come. So most probably in 2025, large cap should do better as compared to mid and small cap. Prakash, it is told that IP in the market is fully based on the data without taking forecast, projections, opinions, commentary, etc. in the consideration. In other, is it based on the hard OCR past data only? With this, does not look like IP suffers from recency bias, but if price info, IP result will remain more or less same between the quarter results. So Prakash sir, what we have done is that what we are asking is a very obvious thing, and in last 10 years, what we have observed that the way we have defined the IP sir, that no single factor basically make the company good or bad. Am I right? So we have put data, our IP in such a manner it helps us to identify the right company which can generate returns for the investors. And if you go back to our returns that we have been able to generate based on the same IP, whether it's a Mojo stock, stock of the month, model portfolio, Infinity portfolio in the past, Mojo PMS in the right now, that gives an idea that how well it has been defined so that we don't suffer from the recency bias. But your observation is absolutely right that we don't take into consideration any forecast in our IP, projections given by the management, opinion or commentary which is there, these are all noise in the market. And our IP basically believe that we should cut the noise and focus on the data, because that will really help us to make the decision much better and sharper. Why there are no small and mid caps Mojo stocks being added after good correction? Is sole PMS still buying mid and small cap stocks? Has the sole PMS now undertaken 100% exposure to one single sector, consumer, auto? Also missing Mohit sir, and if we can have all Mohit, Joyson, Goel and you together doing direct deal say. So point taken sir, I'll convey this message to the complete team including Mohit sir and Joyson sir. And I think you meant to say Amit Goela, not Goel, okay? So that's the second part of your question. Let me first answer the first part. So then why no mid and small caps are based on our IP? It will come. Don't worry, you don't have to worry about it. As and when it will come and get added to the Mojo stock list, and you will come to know it will get updated. Is sole player still buying mid and small cap? We are complete to our IP right now is completely based on the which company is coming in. We bought some mid and small cap. It's not that we are not bought, but has the allocation of small cap is increased in the sole? The answer is no. Has the allocation of mid cap has gone up? The answer is yes. Has sole players now 100% exposed to one single sector consumer? The answer is no. So I hope I answered all questions, Rahul Kumar sir. Will the American tariffs imposed on Canada, Mexico, China benefit India? If so, how? I think if you import a tariff and if that same product is available from India, the landed cost of that product becomes cheaper as compared to Canada, Mexico or China. And what consumer will do? They will always buy the product which is cheaper. So there has been a huge empirical study available whenever because of tariff the product become costly, people do opt out for the cheaper product having produced so. So that's how India will get benefit if in case if you are producing those. Like for example, Canada supply crude oil to the US. Can we replace Canada? Answer is no. So only thing where we are supplying, we can get the benefit if we have product range. If we don't have a product range, no way we can basically, even if there is a tariff, India cannot stand to get benefit out of that. So I think we need to understand what product being. So there's a very nice analysis done by economists, and they've given what products the US buy from the Canada and what products Canada buy from the US. And if you look at that list, it's a very interesting data. So not necessarily that tariff being imposed on Canada will benefit India, because there are certain products which basically US import from Canada. I don't think India can supply anything of that sort. Number one, so there is a logistic cost. Canada and Mexico are the neighboring countries for the US. There is a logistic cost that has to go from India to the US, and hence someone would say, what is my landed cost to get benefit? But from China, I think we can get the benefit. There are certain products which China is supplying, maybe can India supply? And if yes, the logistic could be more or less similar between China and India because the distance is very similar. So that's the way you should look at it. So I don't think we should read too much between Mexico and Canada, but definitely China, definitely yes. Not all products, but there are certain products. If you look at the budget which is talked about, they talked about toys, they talked about footwear. I think these are the products like when, India can get an advantage when there is a tariff being imposed on the Chinese products, and I was reading one nice article in Chennai, and this article just Google search. I don't know which paper I read it or which I read it on online. The Tamil Nadu has become one of the big players of manufacturing non-leather shoes, and it's a very interesting analysis where how Tamil Nadu attracted people to get, and now Tamil Nadu can basically compete with China's footwear and basically offer the product. So that's the way you should look at it. First, products being manufactured by India, which is basically come under tariff between Mexico, Canada and the China, and then what benefit it can give us to us. I think we need to be more focused on China as compared to Canada and Mexico. That's what my analysis is. Sorry, I'm just suffering from a cold. Suresh sir, will the huge bonanza given in personal income tax lift the market substantially over a sustained period? I have a doubt since the tax revenue sacrifice is around huge 1.3 lakh crore, and simultaneously the FM has estimated increase of 20% direct tax revenue in 25-26. The math doesn't seem to add up. This will reflect on the fiscal deficit negatively, which means the promised macroeconomic scene may not be as bad as been made up. To some data points, sir. The tax foregone as per the Ministry of Finance is 1 lakh crore, not 1.3 lakh crore. Now, if you look at this data in terms of the revenue foregone, or not the revenue foregone, but what is the assumption they made, okay, in terms of the income tax. So, just can you showcase this slide? Not possible? Okay, no problem. So, sir, you talked about 20% direct tax revenue. That's not true. The corporate tax, the revenue projection for FY 2024-26 is 10.4% for the corporate tax and taxes on income, which is income tax, is 13.1. So I don't think they, and if you look at the nominal GDP is 10.1% as compared to 9.7% of the previous, that is current financial year. I think this multiply is quite reasonable. I don't think that's something which is out of the thing. So I don't know, sir, where did you get this data of 1.3 lakh crore and 20% direct tax? I think that data doesn't tally with the budget documents, unless I don't know which data you are referring. My request to all of you again, all this data is available on indiabudget.nic.in. Please go there. Economy survey is available. Speech of finance minister is available. All the budget documents in terms of revenue, expenditure, memorandum, annexures, everything is available. Please go through that. I think you'll get an idea. Sridhar says, dear Sunilji, most of the channel, including your good self, welcomes FM budget. Few are naming magic budget, but market is not happy with the budget outcome. Where the problem lies? I think the problem lies with the tariff war. People have become too much focused on the tariff war, and some people say capex cycle has not been revived and so on and so forth, which I beg to differ. Whether investors understand the market is very low, as so-called TV channels are paid for such propaganda, we investors are confused. Please enlighten us. Sir, I don't know whether these TV channels are paid for such propaganda. My job is to present data, facts and figures. On Saturday also, I stated this is a good budget. Normally, market don't move up post-budget. This year, I believe market will give positive 1 month. If I have to again come in front of you in 1st March, market would have given positive returns as compared to what it was there on 1st Feb. So right now, market is a little clouded by the tariff war, and due to that, the good things are not being observed. Second thing, if you look at the fundamental side, GST collection robust, PMI manufacturing 6 months high. You look at the Indian economics, not bad. Valuations become attractive, and rate cut happening by the RBI. All this basically makes me believe that market is going to do well, and that's one of the reasons, sir. I said, Sridhar sir, buy low. पैसा मिल रहा है, अच्छा कंपनी अच्छी मैंने भाव में मिल रही है, please buy it. Don't let this opportunity go. The same investor will go and chase the same stock at 30% high. Why? I don't understand that logic. So I don't want to comment about TV channels and so on and so forth. My sense is that market is giving good opportunity. Please go and buy, but your stock selection has to be good and stock allocation has to be good. That's the only thing you need to keep in mind. Vijay sir saying, when I check the budget, there is not much change in the terms of capex from government. Railways and half infra, the budget is still the same when compared to last year. But why people in the market is doing panic selling, even though the budget is good? Just because Nirmala did not mention about infra, then investors are panic. Sometimes it feels very silly. Government capex still intake. I have question, as the demand increase, will it push the private capex too? Thank you. So Vijay ji, I don't know, we discussed, I think my memory serves me, we did discuss that on Saturday webinar. Government is going to spend 10 lakh crore in the revised estimate of FY 2025. The budget estimate for FY 2026 is 11.2 lakh crore. So there is a clear-cut 10% increase in the budget allocation on the capex side. Government also they give a grant into the state government to spend money, which is near about 4-5 lakh crore, near about 5 lakh crore. So that gives me a value of 16 lakh crore. On the top of it, CPSE is also going to spend near about 4 lakh crore in FY 2026. So we are actually talking about 20 lakh crore for an economy size of near about 360-370 lakh crore. Am I right? So I think it's a good numbers to talk about it. So I don't know why market is basically concerned and panic kind of stuff. I have no answer to that. If market panics, it's good for us because it will give us a good access to buy at the lower prices. Okay, and your question, will demand increase push the private capex? I think so. I think there are a couple of things which is going to happen. One is the rate of interest. When it comes down, it does bring on a boardroom a discussion on the doing capex. When the rate of interest are high, I think that it doesn't get come on a discussion table. the private capex. But now it can happen. So that's one. Number two, this boost which given by the budget will further increase the consumption, and that will further increase need to do the private capex. I'm very hopeful. It may not happen in this quarter. It may not happen in the next quarter, that is April to June. But post June, I believe we should see revival in the private capex too. Mohan Kumar sir, dear sir, absolute employment numbers are increasing in India. Only if the youngsters have income will they be interested in income tax or spend on consumer level or invest. You are right, absolutely, sir. Mohan Kumar sir, someone, there was a nice cartoon there. Since you now given me the rebate on income tax, please give me the income, kind of a stuff. So you're right, the number of people, I don't know the absolute employment numbers are increasing and by what percentage is increasing. It is one challenge that we need to counter, and even government understand that. That's one of the reasons they want. Last year they came out with that. The private players will basically take them as an apprentice and be able to pay them to make it the employable. Second thing, I think government also wants to focus on the new startups ecosystem, so that the job seeker become a job giver. Ease of doing business is another factor in that line, because if ease of doing business happens, more people will set up the businesses, and that will generate more demand for the employment. But yes, it is a challenge. But is it a challenge that basically that's why we should not invest in the equity market? The answer is no. Unemployment has always been a challenge in Indian equity market. It's not that it's a new phenomena. In the recent past, because of slowdown economy, it has become more pronounced. But I'm very hopeful that it will get addressed. What will get addressed, whether it get addressed by the manufacturing, whether it get addressed by the services, it gets addressed by the new what we call startups and so on and so forth, wait and watch. But I think it's not a challenge that we should basically too much worry about, and because of that we should not invest in the equity market. That's why I keep saying you have to be optimistic to make money in the equity market. If you are pessimistic, you will always find some reason, excuse not to invest in the equity market, and will keep missing out. The data which has showed, for many years in a row, retail investors took money out of the market, and we all know from 2002 to 2024 how much market has moved up. It moved up by 40x, and those who basically got out of the market basically lost out on that 40x. As simple as that. Siddhant sir is saying, any specific reason model portfolio stopped giving us return history of 1 month, 3 months, 6 months, 1 year, YTD since inception? Please resolve this issue. I'm not very sure, sir. I'll take up with my product team. अरे ये सवाल जेसन को भिजवा दीजिए please. Priority पे Amir. I'll ask my team to look into this, sir. Thanks a lot for drawing our attention to this. Dr. Sarang sir, 2 questions. First, what are your views on the market making a separate dividend portfolio? Is it useful for a person with 30% tax bracket? The dividends would be taxed same. And second request, if you can please ask your technical analysis team to also put weekly and monthly support and resistance level in stocks. Thank you. So let me first address the second part. I think it's a good suggestion. What are the weekly and the monthly support and resistance? I think it's a good food for thought for us. मुझे ये forward कर देना सवाल. I think we'll definitely discuss with our team, and if you can put it that. As regards to your first part of the question, what are your views on dividend portfolio? I'm not a big fan of that, to be very honest with you. I will always chase a growth company than the dividend yield companies. The company that pays out higher dividends, that means the company business does not have a growth. And if it does not have a growth, normally market does not give that kind of a higher price to earning. That's why it's a high dividend yield. And because the not high dividend P because of lack of growth. So it doesn't create, when you look at the total returns, what is total returns? Capital appreciation plus dividend. Then if you combine both this, it does give you an impression that you don't make that kind of a money. So I'm not a big fan. I would rather not focus on dividend, but focus on the capital appreciation. And the reasons are 2. Dividend income will get taxed at as per your income tax slab rate. But if it is a long term, you'll tax only at 12.5. If it is short term, you'll be taxed at 17.5. Am I right? So am I at 17.5 or 20? I'm also forgetting now. Whatever may be. Okay. So still lower than what the dividend income. So I prefer, that's the way I would look at it, Dr. Saab. But if you still want more clarity, we can discuss offline. अभिजीत मोहंती, जय जगन्नाथ, सुनील जी, बहुत दिनों के बाद सर आप आए. आई वांटेड टू मेक एन एडिशनल इन्वेस्टमेंट 2 tranches of 5 lakh each, but I think there is a minimum requirement 10 lakh for additional. Is it possible to reduce that bar? I'll ask someone, मुझे forward कर दीजिए. We'll ask someone to basically help you with this. मुझे forward कर दीजिए. I'll ask RM to get in touch with you and we'll do the needful. Thanks a lot. Susmita Hennis, hello Sunil sir, as suggested by you, we can continue investing in this market, but many good stocks which are down are sell rating on Mojo. Can we keep on adding a small amount to those stocks? No. So what you think is a good stock may not give you a capital appreciation. So idea is that stock is good, but will it give a capital appreciation? If the answer is no, why do you want to invest in that? There are many good companies which are available with buy on our website. Am I right? Please focus on those companies. Na? Why you want to focus on companies which are sell but good quality? Go with the company which are good quality with a buy on our MarketsMojo site. That's how we should look at it. मंदर गोल्ड का ड्यूटी बोलने वाले थे आप, बजट में ड्यूटी चेंज किया? नहीं सर, कुछ नहीं किया है. आई हैव नेवर कम अक्रॉस एनीथिंग which suggests that you are right. You asked me that question, sir, on Friday or Saturday, sorry. There is no change in that. What has happened in the budget is that some of the imported jewelry, if you can, they will become cheaper. For example, like if you buy some of the imported jewelry which are branded, like, which is that brand which my daughter recently, some of the luxury gold jewelry which are available, where the import duties have come down, that become cheaper. But gold पे कुछ नहीं है change, उसमें नहीं है budget में. Syam Sundar sir, what will be your definition of beaten down blue chips? Looking to identify them and allocate good percentage in them. Very simple, sir. You don't have to do a lot of research. See, MarketsMojo is life so much simple for you people. Somehow you want to make your life a little complicated. MarketsMojo clearly gives you the list of Mojo stocks. Within that, it gives you large cap, mid and small cap. Based on your risk appetite, buy those stocks. Why you want to do beaten down blue chips and so on and so forth? Who knows that beaten down blue chips may remain beaten down for longer period of time? कोई गारंटी तो नहीं चलने वाला है. Am I right? So how to identify, sir? हमारी वेबसाइट पे ये सब चीज़ है, अवेलेबल है, रेडीली अवेलेबल. आवर जॉब इज टू रिड्यूस योर वर्कलोड. पर आपको ज़्यादा काम करना क्यों चाहिए, मैं समझ में नहीं आ रहा. श्याम सुंदर जी, प्लीज़ फॉलो मोजो स्टॉक, प्लीज़ फॉलो मॉडल पोर्टफोलियो, प्लीज़ फॉलो स्टॉक ऑफ द मंथ, प्लीज़ फॉलो स्टॉक ऑफ द वीक. है सब अवेलेबल. वी हैव टर्न अराउंड, वी हैव मोमेंटम, वी हैव रिलायबल परफॉर्मेंस, दैट इज ऑल्सो अवेलेबल बेस्ड ऑन रिस्क एपेटाइट. ये सब रेडीमेड अवेलेबल आपको है. आपको क्यों हम बोलते हैं हम आपको चाय बना के देंगे, आप बोलते हैं भाई दूध कहाँ से लेके आए, चाय की पत्ती कहाँ से लेके आए, कितना उबाले उसको, उसके लिए गैस कहाँ से लेके आए, भाई क्यों करना है, चाय का मसाला कहाँ से लेके आए, हम आपको दे रहे ना ये रेडीमेड. आप चाय पीजिए ना सर. FIs have made only 4% post-tax in terms of dollars on Nifty last year. Doesn't Nasdaq makes a better case for investment? Your opinion, please. So, Durgesh sir, that's an historical, am I right? Had that been so easy, people would look at what last year did is going to do future, and by that logic, every year that index should keep doing well. Because जिसने लास्ट ईयर अच्छा किया, एजम्पशन क्या है, कोई इस साल भी अच्छा करेगा, उसने इस साल अच्छा किया तो नेक्स्ट ईयर भी अच्छा करेगा, वो नेक्स्ट ईयर अच्छा किया उसके बाद वाला साल भी अच्छा हो जाए. That's not how the market works. That's not exactly not the way market works. And I'll give you one data which was there published in the economy survey. Okay, and again this is data coming from the economy survey. It's not my data. and I'll just let me search that data so that I don't make mistake. It says, so don't look at 1 year, 2 year. On a long-term basis, Indian markets have been the best performing markets in the world. This is a statement from the economy survey. The compounded annualized returns of Nifty 50 for the last 10 years since March 2044 stands at 8.8% adjusted for USD. Trailing below a few indices such as US Nasdaq and US Dow Jones among the select set of significant markets as of December 2024. The corresponding CAGR of China's Shanghai Composite Indices stands at 3.2%. So when you look at 8.8% in last 10 years of the Nifty 50 and the US Dow Jones was 9.2%. Dollar adjusted. Dow is anyway dollar adjusted. I'm talking about Nifty 8.8%. This is all there in the economy survey. So I think that's where, the why would the FI will come in last 10 years, did they not come to Indian market? They did come to the Indian equity market. They invested very heavily. 2023, they invested highest ever in any single year. 2024, they were still net inflow, but little muted. And again, I'm telling you, FPI will come because of the India's strong growth story. India will still be the fastest growing economy in the world. Valuations become very good. ROEs are going to go up. Interest is going to come down. The consumption cycle is going to go up. Capex has gone anyway better than what it was this year. These are all the levers. Why will they not come? Imtiaz Sheikh, you often emphasize that professional families have a better understanding and can manage money more efficiently. However, in just 1 year, my preference down declined, but from 20% gain to 5%. And after tax and TDS, the net return is merely 1%. Does this truly reflect efficient portfolio management? I understand that markets are volatile, but I wouldn't expect such a significant churn in the professionally managed fund. It seems that PMS is autopilot mode, if not all, at least low ticket size portfolio. What's your view on this? To Imtiaz, sir, if you look at it, and all our data are available in the public domain. Whatever has happened in the month of January, where the mid and small cap indices have fallen by almost 14-15%, excess in double digits. There's a huge fall in the large cap also, and I've shown some data in my PPT how market has fallen since October. In last 4 months, what kind of damage it has happened in terms of BSE 500. 85% of the companies have fallen at least by 20%. At least by 20%. In other words, only 15% have been able to maintain either the same level or gone up. Your portfolio declined from 20 to 5%. You still did better than the rest of the market because BSE 500 itself. And having said that, sir, I must tell you, because you mentioned about that, we are the professional, so we should be able to basically, sir, when the sentiments are down, the market does not look at some of the good quality fundamental companies also comes under pressure. What would you do with that? Basically, if there is no change in the fundamental story, but still your portfolio will come down. Why? Because the scrip has come down because of the poor market sentiment. And again, it bounced back. So, and one should never look at the fund manager on a one year basis or maybe 2 years basis. I keep giving classical example of Prasanth Jain, one of the finest fund manager India has ever produced. And there was a period where he underperformed, not for 1 year, for many years in a row. But eventually he did very well. So you need to understand, best of the best fund manager can also, because sometimes your strategy doesn't play out the way it should play out. Am I right? Not necessarily that every year your strategy will play out. Some years some strategy will play out well, some other years some other strategy will play out. What matters as an investor, sir, is that what kind of return you are able to make over a longer period of time. And that's the right way to look at it. Otherwise, what will happen? You'll keep jumping from one to another. There was an analysis which is done by the Motilal Oswal. They did the analysis that the mutual fund scheme, which has performed the best in a block of 3 years. What happens to the same scheme next 3 years? And what the analysis came out with, this is finding is that the best performing scheme normally in the last quartile in the next 3 years block. The strategy is the same, most probably the fund manager is the same, but why that fund manager who did well did not do well and vice versa. And the same way, the analysis also suggests that the guy who did not do well was on the top quartile. So that's why you need to understand, sir. So please remove that notion from your mind that each and every year we will outperform. Each and every year we will make money. That applies to equity as an asset class also. What matters is that what gives us the confidence that we will be among the top quartile in a block of 3 years, every block of 3 years amongst all the PMS in the country. And that's what our endeavor and job is, sir. Madhusudan sir, why don't you reduce corporate tax like Singapore and Dubai to increase the FDI investment? We have biggest market and with lowest tax rates, Indian economy will grow faster. Indian companies are known for investment in R&D, not known for a futuristic company. More jobs in the economy will spiral up. I agree with you, sir. It's only the question of trade-off. How much you reduce? If you look at in India, the corporate tax are much lower than the tax you and people pay. Am I right? The highest level is 30%. The corporate pay only 25%. So still, now your point taken, there is a scope to further reduce the corporate tax. But then how do you compensate? What happens to the loss of revenue and how long do you need to wait for that trade-off to pay off? I think government must have done that analysis. But I do get a sense because the government is focusing on the ease of doing business and so on and so forth. I would not be surprised in next 2 or 3 years, we also see a corporate tax coming down to 20% or maybe 15% in some cases, where they want to encourage more manufacturing and hence they will come with the carrot that if you set up a manufacturing plant which goes on stream by so and so that for next 10 years or next 5 years, you pay only 15% corporate tax and not 25%, that kind of a. But I agree with you, there is a merit in your argument, sir, Madhusudan sir. The only thing, timing. I'm not very sure. I think government is confident enough by lowering the tax rate, there could be a buoyancy in our tax income, especially on corporate tax, because anyway corporates are more or less compliance only. So there cannot be any kind of inefficiency that can move into the efficient model, and because of that we increase the revenue of the corporate tax. So that could be the simple logic. That's why they have not done it. है एक लास्ट सवाल ले ले भाई तू मुझे है सवाल sorry because I've been constantly meeting since morning, so back to back I'm having a meeting, and this is from the previous meeting also I just rushed into the webinar, so I'm little mentally so tired. Namaste Guruji, what capex almost same as last year for capital goods, infra, defense, railway, do you feel this? भाई ये तो ले लिया ना हम लोग ने. एक मिनट ये नहीं लिया. Okay, well the stock may not run like previous years, but still there are order book is robust for next 2-3 years execution. What we should do as an investor, if we are ready to hold another for 5 years, capex not down but the same as last year, and government may increase the next year onwards. What should be a strategy, holding tight or sell capital infra, defense, buy consumption? So, okay, again I repeat, Sagar sir, I think you missed out on my comments which I made today only. Post budget also, we are not changing our view on top 3 sectors which will do well in 2025. First is private sector bank, second is FMCG, and number 3 is capital goods / infra. So we strongly believe that you should remain into that. Since you asked one more question of defense, and yesterday night after going from home and leaving office and going home, at home I was listening at 11 at night that CNBC did a interviews with some of the secretaries, finance ministry secretaries, and I was going through one defense, I think minister from defense or secretary from defense, and he was saying that they want to increase the capex on the defense side, and he was talking about a very big numbers there. Second thing, he made a statement that we are one of the largest importer of defense, we want to be the exporter. So I think if you now the time is so that statement really made me. I was pleasantly surprised with that kind of a confidence in the statement. So my sense is that defense as a industry should do well, provided your stock selection is right. Because what I'm getting a sense from the market is that some of the defense companies are a little struggling in terms of living up to the expectation of the our army men or the defense personnel. So that's where I think they need to upgrade their product quality and the R&D to meet that demand. So, but otherwise, if you get into the right defense company, maybe you can make money. But remember, again, repeat: private sector banks, FMCG, and capital goods infra are the sectors which are likely to do well in 2025. I know there will be more questions from you. In the interest of the time, we need to conclude. I'm also a little tired today. So we are concluding this. I'm traveling, so there are no webinars from my side, at least till next Tuesday or Wednesday. Where is my next webinar? Next Wednesday, again, I'll be in front of you with the QnA with Sunil Damania. Next Thursday, I'll be in front of our PMS customers with our report card and so on. So till then, good night, take care.